Hey there, Randy here. It's been too long since I've sent you a video, so today I got dressed up and put on a bow tie just so I could shoot you a video and stay in touch with you. Last Friday I had the great privilege of sharing the stage with Ryan Lundquist, doing a presentation on market updates and where we are in this crazy cycle and uncertain times. And we were able to present that to the Masters Club members, and it was just a great time. And today it was my intention to share highlights of that technical analysis with you. And I decided to scrap all that. I really just wanted to say, I miss you. I miss our normal market, the opportunity to get together in person and share what's going on, to be able to talk about issues and ideas and how to be more successful in this market. And I want you to know that I'm here for you. I want you to know that if you need anything, I want to be available to you. And so please reach out. Know that that's important to me. I do want to share just two things that I was thinking about this week that might be helpful to you. Number one is that we all know interest rates are pretty amazing. In fact, they're at historic lows. But your clients are hearing on the news that the Federal Reserve doesn't plan to change their interest rates for as long as maybe the next 2 years. And so there seems to be a lack of urgency on buyers' parts related to interest rate. And I just want to share with you that a couple of things. Number one, mortgage interest rates can increase even if the federal funds rate doesn't change. Now, you'd think that's intuitive, but people aren't getting that message. So we need to be sure to share that with our clients. Mortgage rates can certainly increase, and sometimes precipitously so, without the Federal Reserve moving. So we don't know when rates are going to go up, and there's no indication in the short term that they're going to spike anytime soon. But rates are at historic lows, and it's a great time for them to take advantage of that. I just did a quick analysis in December 2018. A typical FHA buyer putting the minimum down payment on a $400,000 house in Placer County would spend $2,800 a month. That's just a little over a year and a half ago. Currently, that same $400,000 purchase, the payment, total payment, taxes, insurance, everything would be under $2,400 a month. So there's a huge opportunity for our buyers to save money, and we don't know how long that opportunity is going to be here. So it is important that we communicate that sense of urgency. The other thing is a tip I heard from an expert talking about the trend with people continuing to stay longer in their homes and not sell and buy the new home as often as we used to. We used to think it was about 6 years, between 5 and 6 years, and now it's trending up toward double digits, and some people are even saying more like 12 years. With people refinancing their rates and having historic low payments, that may even go longer in the future, and we need to keep an eye on that. So therefore, that could have an impact on our already low inventory situation. But it's interesting that if you look at those folks under 35 years old, those traditionally called the Millenials, those folks tend to move every 3 years. So my tip for you today is, who in your database, who bought a home from you less than 5 years ago who's under 35 years old? They're probably already, if they're anything like the statistics, thinking about selling that home and moving up. So why don't you reach out to them right now and see if you can't add to our inventory and help improve that situation by just one seller. Wouldn't that be fantastic? Again, please reach out to me, text, call, email. I'm here for you. I miss you, and I want to be able to help your buyers when they're ready. And thank you so much. I hope you have a great weekend.